Hello YouTube, it is the Aussie Share Trader here. Okay, I'm going to give you some good info today. I'm going to tell you the three trading methods that I use, three different methods to get three different outcomes when I'm trading or when I'm buying shares. Just keep in mind that I only deal in ASX listed shares. I don't do Forex. I don't do commodities, I don't do international shares, nothing else, just ASX listed shares, and I use different methods to achieve different results, and that's what I'm going to try and explain in this video. I'll just quickly read this disclaimer. This video outlines my personal methods for trading ASX listed shares and should not be deemed specific advice. Please do your own research before investing in shares and contact a licensed professional to discuss your own investing requirements. Okay, so that's just telling you that this is specific to me. This is the way I do it. It may not be suitable for you at all. You may have a completely different needs. You may be at a different stage in life. Okay, so just do your own research. Okay, so the three trading methods are long only, short-term trading. So long only meaning I only buy shares that I want to go up, and I do it short-term. Now short-term to me means less than 3 months. I know some people think short-term is day trading or intraday trading. No, short-term for me is less than 3 months, and that's pretty much what I talk about on this channel. I'm talking about long only, short-term trading when I do my monthly shares that I'm looking at. That's what I'm looking at. Yeah. Number two is long only, long-term investing. Okay, so it's not really trading at all. It's looking longer than 12 months to infinity, basically. So that's the second method I use. And the third method is a long-short portfolio management. So this is where I go long and short, and if you don't know what that means, just Google it. But basically it's I have my own little hedge fund where I try to mitigate risk and protect myself against any large swings in the market, and try and get a more even sort of gain over time. Okay, so they're the three methods that I use. I'll go into each one of them. Okay, so the long only short-term trading, that is buying shares with the sole purpose of selling them at a higher price within a 3-month period. As I said, that's what I talk about when I do my videos for this channel. It's just specifically that type of trading. I trade this method using a proprietary limited company with my wife and I as directors. Now, the reason I use a company for this type of trading, it helps me to keep my tax maintained at the company rate. Sometimes the problem with trading, if you're going well, the tax man can really get hold of you because it all goes onto your own taxable income, and if you start getting into the hundreds of thousands of dollars, you start getting taxed almost 50 cents in the dollar. So you may not need that much money to live on. That's why if you trade in a company, you can just take as much money as you need as a wage and leave the rest in the company, and it can pay the company tax rate, and that money can sit there and you can keep investing it or keep trading it, or you can pay dividends down the track to yourself or other directors or shareholders. So it just gives you more flexibility. The second reason, you can disperse the profits at your discretion. And the third is you can introduce other shareholders, and you've got a bit more flexibility with what you do with the money over the long term. You know, if you've got kids and that you want to introduce into your business, having a company really helps with that. So that's what I do with my long only short-term trading. Yeah, I use a proprietary limited company. So the second type of trading, well, this isn't trading, this is investing, is long only, long-term investing. So that's buying shares with the purpose of holding them long-term, 12 months to forever, to provide an income from the dividends and some capital gain. So this is, I guess this is what Warren Buffett and his type of trading espouses. You know, you buy and you hold, and you keep adding to it over time. Now that's fine. You know, if you got money, that you want to get dividends from over time, this is what you do. So you don't have to do any one of these in particular. You can do both. That's what I do, and I do 3 different things. But so there's not one specific way or one specific box that you have to fit into. You can be a long-term investor and you can be a trader as well. So don't feel like you just have to do one and you can't do the others. Now this method I just use my personal name for. So I'll buy shares in just my own personal name or in my wife's name, and as I said, we hold them for the long term. I'm 43 now, so I'm looking 15, 20, 25 years down the track, hopefully still holding those same shares. The reason I do it in our personal names is to take advantage of the capital gains tax exemptions. When you hold an investment for more than 12 months, if you do happen to sell it, you're only liable for capital gains on half the capital. You're only liable for tax on half of the capital gain. That's the way the tax rules are as of today. Of course, that can change in the future, and really you do have to be careful with setting things up just to make it tax effective. It has to fit your whole structure. Some people get obsessed with avoiding tax, and they do stupid stuff to try and throw money away so they don't pay tax on it. So they lose $1 to save 30 cents. So you do have to be smart with that sort of thing. If you don't really understand it, then that's why you need good financial advice. So that is my long-term investing. And the last one is a long-short portfolio management. Now this is holding both long and short positions to hedge out risk. I again keep trades to a maximum of 3 months. So if you don't understand what long and short means, Google it so you do understand it. But this is basically what hedge fund managers do. They're trying to just hedge out some of the risk. So if the market did happen to capitulate, 25-30%, then you're protected somewhat. But you're also costing yourself some gain in a bull market. So you've got to use this sort of in the right sort of market and for the right reasons. This is the way I trade our self-managed super fund that's in the name of my wife and I. We're looking with that, again, we're looking 15, 25 years down the track. So I want to really try and preserve this money. I treat this the safest, and I don't want to lose my capital, and I'll give up some gain to preserve that capital. And that's what a long-short portfolio is for. I think that's it. I think that's the whole video. 8 minutes, it is done. Look, that's the way I do it. So I stress, it may not be suitable for you. You may not have the funds yet. You may not need that structure if you're just a single guy. But as you get on in life, once you get into your 30s and 40s and 50s, it becomes a little more complicated. At the end of the day, you want to keep things as simple as possible still. I'm a big believer in keeping things simple. Don't want to overcomplicate, but you do have to do things properly as well, and sometimes it takes a little bit of work to do that. So that is it. I'd love to hear your comments, any questions that you may have, and if you have other ways of doing things, I'd love to hear about it. I'm always looking to learn myself, so if you think there's better ways, tell me. I might be able to do things better as well. So I think that's it. Is that the end of the video? Oh no, that's right. For this, for the long-short portfolio management, I use CFDs, which are contracts for difference. These can be a little riskier. That's why I try and mitigate some of that risk, because I also do leverage with these as well. If you don't know what they are, again, Google it. I use the Saxo platform for that. Okey-doke, that is definitely it. No worries, guys. I hope this video has been of some help. Do comment below if you have any questions, and I look forward to talking to you soon.